What's good, guys? How's it going? I hope you guys are all doing good today. So, last episode we went over candlesticks. Today we're going to be going over market structure. So, if you guys have ever looked at a chart and just thought that it looked like random shit, then this is going to change that for you forever. So, before we do fair value gaps, before we do liquidity, before we do anything else, we're going to go over market structure so that you guys understand kind of why the chart looks like what it looks like. All right, so market structure. So you guys need to know that a bearish market moves in lower highs and lower lows. And then a bullish market moves in higher highs and higher lows. I know that probably sounds confusing. I remember when I first learned this, it was really easy to confuse everything, but I've drawn something up here for you guys. So let's get into it. This is a bearish market structure. So you can see we have this high right here. And then we make a low, and then we have a lower high. So what is a lower high? This high is lower than this high. So we have two highs here, and this is a lower high of the two highs. The lower high, and then a lower low. We have a low and a low, and this is a lower low. So we made a lower low. And then next we make another lower high of these two highs. This one's lower. And then we make another lower low of these two lows. This one's the lower low. So we have a high, a low, a lower high, a lower low, a lower high, a lower low. So I hope that makes sense. You don't confuse it too much. It's just we're going down and we're making lower highs and lower lows. So a bullish market structure is basically going to be the exact same thing, just reversed. And you guys are probably going to notice that with a bunch of these concepts. When you reverse bullish and bearish, it's just going to be the same thing but reversed. So we start with the low, and then we have a high, and then we have a higher low. It's a higher low. This is a low, and it's higher than this one. And then we have a higher high. It's a higher high. It's higher than this high. We make a higher high. And then we have a higher low, higher than this low, and then we have another higher high. So this is a bullish market structure. I feel like I'm saying the same things over and over. My brain's going crazy. Higher high, higher low, lower high, lower low. Try not to confuse it too much. It's as simple as it looks. I hope that makes sense to you guys, and yeah. All right, so I just drew something up here for you guys. I hope that this helps you out. We're just going to go over the four structures that we just talked about. So a higher high, price breaks above a previous high. So this is our higher high. Lower low, price breaks below previous low. So this will be our lower low. Higher low, price pulls back but doesn't break previous low. So price pulled back, but it didn't break our previous low, and this is our higher low. And then finally, the lower high. Price falls and makes a high lower than the previous one. So price fell and made a high here lower than the previous high. I hope that this doesn't overcomplicate things for you guys. I was trying to make it easier here, so feel free to screenshot this and look back at it whenever you need. I hope that this really helps you guys out. So I want to teach you guys how to identify trends. So there's what we call a downtrend, which is what we've already learned. This is also called the bearish market structure, as we just learned. So that's a downtrend when you have the high, then the low, then the lower high, then the lower low, then the lower high, then the lower low. And then we have what's called an uptrend, which is what we just learned about the bullish market structure, which is the low, then the high, then the lower low, then the higher low, then the higher high, then the higher low, then the higher high. And the third one is what we call consolidation. So this is when we don't either have an uptrend or a downtrend. We're just kind of moving sideways, not making higher highs, not making lower lows, kind of just chopping to the side. And it kind of looks like a pattern like this. Okay, so now I'm going to teach you guys about the first sort of confluence during this series. So I'm excited. It's the very first important, well, everything's been important, but it's the very first big thing you guys are going to learn. So far, everything's kind of just been build up and understanding things that will build off of the next thing, but this one is a big one. So it's break of structure. So this has a lot to do with uptrends and downtrends. First, we'll do an example with an uptrend. So let's say we're in an uptrend, we make a high, then we make a higher low, then a higher high. So right here, we've already made a break of structure. A break of structure happens when we break a previous swing high or low. So as we broke this high right here, that's our break of structure. You can see I'll use an example. If we were to keep going here and we keep forming our bang, another break of structure. Because it happens right here. We close above that. That's our break of structure. And this is also our break of structure. So the same thing can be applied for bearish moves. So let's say we're in our downtrend, making lower highs and lower lows. And we have multiple break of structures here. You can see right there is a break of structure because we go below our previous swing point. So that's our swing point. We go below it. So this is a bearish break of structure. And then we've got another one right here. We go below that, swing low. That's another bearish break of structure. And that's basically all I have to say on break of structure. It's honestly super simple. Don't overcomplicate it. I hope that makes sense though. Like just know that once we go above or below that previous swing low or swing high, that's when a break of structure happens. And the point of a break of structure is to tell us that the trend is continuing, right? Like this, as you can see, as we break the structure, we're like, oh, we're making another higher high. This means that the trend is going to continue. But if we don't have this break of structure, let's say here, I'll make another example for you guys. Let's say that we're moving in higher highs and higher lows in an uptrend, and then we don't get our break of structure. This is not a break of structure because as you can see, we don't close above this swing high. Meaning, how am I supposed to know that our trend is continuing? We didn't make our higher high. So this is not a break of structure. I hope that actually clears things up for you guys. But yeah, super simple. Don't overcomplicate it as always. Okay, so the last confluence of the episode, I'm going to be talking about change of character. So eventually trends have to end, and this is what change of character is about. So let's say that we're in an uptrend for this example. I always like to start things in uptrends. I feel like it's easier to understand. Let's say we're in an uptrend. We're making higher highs, higher low, higher high, higher low, higher high. And a change of character happens when we close below our previous swing low or swing high. So in this case, we're making higher highs and higher lows. Looks like a healthy uptrend. And then all of a sudden we close down here. This signifies our change of character. So it happens right here. This is our change of character right there. And the same thing can be applied for a downtrend. We're making lower highs and lower lows. And then all of a sudden, healthy downtrend, but then all of a sudden we close. Oh no, we closed above that swing high. That's our change of character. Super simple. This is the kind of like you can kind of think of it as the opposite of break of structure. Break of structure means the trend's continuing and we have healthy, healthy, healthy. And then change of character is basically the trend's not going to continue. You can't just assume the trend's not going to continue, but it's just, that's kind of what it's saying, right? So we close above, we close below. And then I'll give you guys an example when change of character wouldn't be happening. So let's say we're in an uptrend. And then do you guys think that this is a change of character? No, right? Because we didn't come below this swing low. This would be a change of character. But this isn't, because how can you tell that we're not just gonna how can you tell that we're not just gonna go back up like this? That just looks like a healthy uptrend to me right there. So I hope that makes sense. Change of character. Again, super simple. As always, don't overcomplicate it. And yeah, that's our second confluence of the day. Okay, so now we're gonna go and hop into the charts for some real examples. I hope that this doesn't complicate things for you guys, but I'm just gonna go over a few things once we get in there. And again, just try to keep it simple. Remember what we just learned. I know that we're gonna be looking at candlesticks now, and I remember when I was first learning, going from those drawings to the candlesticks can be a bit confusing, but I'm gonna try to make things as simple as possible for you guys. So here we go. All right, so my camera just died. It's like an hour later. Just want to get this video over with, but I think what we were going to talk about here is understanding highs and lows with candlesticks. So we just went over highs and lows and market structure when I drew it out for you guys, and I think that's a lot easier to understand than these candlesticks that probably look confusing to lots of you guys right now. So I'm going to keep it as simple as possible and just don't overcomplicate it, okay? Like, I'm going to tell you guys exactly how to understand it, and you're going to go, oh, well, what about if this happens? What about if this happens? Just shush and just listen and don't overcomplicate it, okay? So, as you can see, these are bullish candles. And then once we go bullish to bearish, the top of whichever one of these wicks is higher is going to be our high. So this right here is our high. I just drew the line out. That's our high. And then when you have bearish candles, once you have bearish, then bullish, then the lowest of these two wicks is going to be our low. So this is our low. That black candle is slightly lower, but yeah, that's our low. So now I'm going to give you guys a few seconds to try to find some more highs and lows, okay? So immediately what I see here is we start going up. We have blue, then we have black. So bullish, then bearish. The higher of the two wicks, that is our high. The easiest way that I can tell you guys to think about it is think about just the way, think about the way that the market's moving, right? Like, as you can see right here, we're going up, bullish, 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 then we go bearish. So we'd be looking for a high, right? Because we're going up and then we're going down. So we'd be looking for this point here. If that makes sense, this point is similar to this point. It's our high. So I hope that makes sense. We can quickly go over another low. So we have black, then blue. That means down, then up. So this right here is going to be our low. Simple as that. That's our low right there. Okay, so now that you guys understand highs and lows, we're going to talk a bit about identifying uptrends and downtrends. This is the last thing we're going to do. I just want to make sure that you guys understand how to identify an uptrend and how to identify a downtrend. So as you can see right here, we're moving up. We have this low right here. It's down then up, so I'll mark it out for you guys. I'm going to draw this out nicely. This is our low. And then we start going up, and then we have a high. So this is just our high, right? There is our high. And then we keep going. We have another low. So this low here is our higher low. See, we have a low, and then we make a higher low. I'm just going to put HL. That should make sense for you guys. And then what do? This is our up and then down, and then we have a higher high. Because this is a high. Sorry, let me turn this off. This is a high that's higher than this high. So we have low, high, higher low, higher high. So what is this? This is an uptrend or a bullish market. Okay, now I'm going to do another example with you guys, but with a downtrend. This one might be a little bit harder to understand just because these candles are kind of squishy here, but it should make sense for you guys. So I'm going to start right here. We have blue, then black, so bullish, then bearish candle. So this right here is going to be our high. And then we're going to keep going, right? Oh, black, then blue, so bearish, then bullish. Then we're going to make a low here. That's our low. And then we keep going, right? Oh, bullish, then bearish. So now, bullish, then bearish, you take the top of the wick. That means that that's another high, but that is a lower high. LH. You see how this high is lower than this high? Lower high. And then we keep going. Oh, bearish, then bullish. Take the bottom of these wicks, and that's going to be a lower low. So what is this? High, low, lower high, lower low. This is a downtrend or a bearish market. Simple as that. Don't overcomplicate it. That's how you guys can identify trends with candlesticks on the market. Okay, guys, so I'm going to end with a quick quiz to recap and make sure that you guys kind of understand what we learned today. So, question 1, is this a bullish or a bearish market? Right here. I'll give you guys a few seconds. All right, if you guys said bullish, you'd be correct because we're moving in higher highs and higher lows. This is a bullish market or an uptrend. Okay, and for question two, a market is moving in lower highs and lower lows. Is this an uptrend or a downtrend? Or is this a bearish or bullish market structure? I'll give you guys a few seconds here. If you guys said downtrend, you would be correct because we're moving in lower highs and lower lows. And here's a quick little recap for you guys. So, first we learned that price creates highs and lows. Super simple. You guys identified them with candlesticks, you've seen them with line charts, everything. Second, highs and lows create trends. So, highs and lows create a higher high, lower low, lower high, lower low, creates uptrends and downtrends. Third, trends eventually break. So, that's going to be our change of character. So, when a trend breaks, that's called a change of character. And then we learned about a break of structure, which is the trend continuing. Okay, and that's going to wrap it up for episode 3. I won't forget your guys' homework though. So for your homework today, I want you guys to go on TradingView and I want you guys to use a candlestick chart and identify highs and lows and mark them out and take screenshots of them or take pictures of them or draw them out if you use a physical journal. And then, yeah, put them into your journal and make sure they're marked out and say this is a high, this is a low. And then also, after you do that, once you identify a bunch of highs and lows, identify trends. So find higher high, higher low, lower low, lower. You know what I mean? I get mixed up when I say it over and over, but identify uptrends, identify downtrends, and take screenshots and put them in your journal so that you guys can get comfortable just looking at charts. Like, when I look at a chart now, I don't even really like think about anything like that. Like, I swear I just kind of, I'm sure this is with lots of people too. Like, once you see this stuff enough, you don't even have to think about it. Like, you can tell that you're in a downtrend. You can tell you're in an uptrend. You just find your highs and lows easily. You can mark things out easily. But yeah, for some of you guys that you guys want to get more comfortable with that, that's going to be your homework and that's really going to help you out. So I hope you guys enjoyed today's episode. I'm hoping to keep pushing these out at least one video every 2 days. I've been busy though, but yeah. Thanks for watching, guys, and I'll see you in the next one. Peace.